watching Your Money Matters here at NDTV Profit. I am Mahima Vachrajani, and today we're going to talk about two very interesting topics. The first one is IPOs. 2025 was a blockbuster year for IPOs. Heavy subscription numbers, strong grey market buzz, and massive retail participation. But once the dust settled, did the returns live up to the hype? Is the question that we're going to ask to our guest tonight, and to look at how the IPO scorecard is looking like, and to take this conversation ahead, Narendra Sonaki, Head of Fundamental Research Investment Services at Anand Rathi, joining us now. Mr. Sonaki, thank you so much for taking out the time. Firstly, in terms of 2025, the second half of 2025 did see a flood of IPOs coming in. We saw heavy subscription numbers as well. Some saw listing gains. But if you have to give retail investors a report card so far as to how IPOs have done in 2025, what would that report card look like?
Yeah, hi, Mahima, and thank you for inviting me. Definitely, the second half of 2025, we have seen buzz coming back in the primary markets. Initially, the start of the year was riddled with a lot of geopolitical uncertainties and US tariff tantrums, etc. And gradually, what we have seen in H2 is that the tariffs have started coming down. It looks more likely that India would also be signing a deal very soon. Plus, a lot of geopolitical uncertainties have also reduced. And added with that, we have seen multiple rate cuts along with not only from RBI but also from the US Fed. So all these things plus the domestic factor macros like inflation coming down and the growth picking up, especially the Q2 GDP, which has been surprising on the positive side. So all these macro factors have also added to the sentimental optimism, and hence we have seen a bumper IPO this year in the H2. And I think we have almost hit more than 100 IPOs. A century of new IPOs have already been hit. And we have also surpassed last year's peak IPO funding, and I think we are closely sitting at around 180,000 kind of number, and maybe we would be crossing and touching around 190 or something by the year end. So definitely the IPO in 2025 has been very good. Now, coming to the 2026 outlook, I think the market would be still be buzzing with a lot of IPOs from the big names, and the markets are also expecting that a lot of companies like Jio, NSE, Oyo, and new age companies like PhonePe, Flipkart, PayU, Zepto, Boat. So these are the interesting names which are lined up for the next year as well. So I think the market should continue to remain in a good mood as far as IPOs are concerned.
But Mr. Solanki, do you think that recently, with a lot of IPOs that have come in, is it about strong businesses coming into market, or it is more of strong marketing of businesses coming to market? What is the view like?
I think it's more about the business of the company as well as at what valuations the company is coming out with an IPO. So wherever investors have found out that the business proposition for a company is very good and the valuation is also very attractive, so that IPO has performed really well. For example, you may have seen how the LG IPO has done the listing gains. So where in that scenario, the business case was also very good. The growth was very promising. Being a market leader in most of its segments, having a market share of more than 40% across multiple segments, gave the company a kind of a moat. Plus, the valuations were also very reasonable. Hence, the investors have rewarded it very well, handsomely in the listing. So, whenever both these combinations fit in for the company, we see a good amount of listing gains. Even on a standalone basis, either of these combination should be there for any stock to perform better post the listing. So overall, good business internals as well as attractive valuations should be the key criteria for analyzing that.
The other aspect that generally people look at is grey market premium, and that's one of the reasons as to why a lot of investors go ahead and invest in these IPOs as well, right? How reliable do you think that grey market premium is as an indicator to subscribe to these IPOs?
I think since in the name itself suggests that it's a gray area, hence the reliability is really questionable. And I think investors should not actually keep keep their premise of investing just because of the numbers shown in the gray market, because they are very risky. And actually, what they should do is to study the company, look at the valuations of the IPO, and then make an investment case rather than just following whatever the number is being shown into such kind of messages or websites.
Okay. Several IPOs, Mr. Solanki, were oversubscribed many times, but have struggled post-listing. And, retail investors who did not get subscription chased the counter after it got listed. That led to a spike, then a sudden downtick in the counter. How do you advise retail investors to deal with such IPOs?
I think, as I've said, that post-listing any IPO is just kind of any normal stock wherever you are going to invest. So analyze it that way, study the business of the company, see how the business is going to improve, what are the competitive intensities in the industry, where the company is operating, what are the growth prospects, what are the plans of the management of the company, and how has been the company performing in its latest results, be it quarterly results, annual results, etc. And then see at what valuations the company is trading. So I think analyzing all this, so I think it's not a different kind of analysis wherein you apply to any new company versus any existing company. So it's all the same things which you have to look wherever you are trying to invest into stocks for medium to long term.
Do you think, Mr. Solanki, you did talk about valuations in your previous answers. Do you think that IPOs in 2025 were priced for growth, or were they priced for perfection? Because there were some IPOs that were extremely overvalued yet oversubscribed.
I think it's a mix of both. As far as data is concerned, if you just look at on the basis of the data, definitely the kind of valuations at which the IPOs may have been listed in past, maybe 5 years back. So we have seen a significant premium listings this year. So that is true. But again, you have to see it on a more granular basis. So when you compare any IPOs coming 5 years before and the kind of IPOs which are coming now, so there is a huge difference in the structure of the companies as well as the industry itself. So right now, what we have seen is that earlier most of the companies who were coming with the IPOs were mainly into the manufacturing kind of segments. Right now, in 2025 or in recent years, the companies are more of companies which are operating into a services sector. So they have a very small physical footprint, and a lot of optionality is there in terms of providing services. Hence, the services companies have generally multiples on the higher side. Plus, some of the new age companies wherein the growth runway is very huge for most of these companies. They are expected to grow and become a 5x or more than that in terms of their revenues and profitability. So if you have that kind of a high growth runway, then it's certain that the valuations would be at a premium side in comparison with other companies in other sectors as well as in the later stage of the businesses.
Not understood. With regards to the mindset of, exiting on the listing day itself, do you think that's a dangerous thing to do? If a retail investor is looking at a particular IPO from just a listing day gain point of view, is that the right approach to it? How should one go about it?
I think in the markets, there's nothing like a right approach. So everybody invests and everybody sees the market from his or her own perspective. So it is ultimately the person who is putting in his or her money. So he is the best one to decide how long he wants to play. We have seen that there are players who just invest for listing gains. Plus, we also see there are investors who invest in for a very, very long time. So in markets, there are multiple kind of investors and there are multiple kind of strategies which different people deploy. So even if you see the listing gains data, so I think in last 3 years, we have seen overall on an aggregate basis, the listing gains have also, the investors who are following the kind of this kind of a strategy has also made a decent amount of money along with the medium to long term investors.
Mr. Solanki, what's the biggest red flag that retail investors should have spotted in 2025 IPOs, not just in 2025 but before that as well, but has still not been able to do that and should do that going forward in 2026?
I think what investors should really do is that whenever they are trying to invest in a very early stage company or a very new age companies, so they should not follow a knee-jerk kind of a strategy, wherein because these companies tend to have a volatile early periods. So in any new age companies, there are a lot of volatilities involved. There are a lot of variables. Even the management of the company is still evolving their medium to long term strategies. The competition is also very severe. So there are a lot of variables into the play in the business. So they should not react to each and every news, either it is negative or positive in a very short term manner. And they should have a medium to long term outlook in terms of evaluating their investment rationale, and then only take a decision based on that. So I think everyone should follow this kind of strategy in order to consistently make investment return in the markets.
Understood. One last question, Mr. Solanki, to you is with regards to the IPO market maturing. Do you think that as and when we move forward, do you think the IPO market is maturing, or there are still lessons to be learned by retail investors?
Yeah, I think our markets are definitely has matured. Plus, there's there's always a lesson to be learned from the market. So it's a never-ending thing. So you always try to learn something from the markets. And so definitely, I think we are continuing that journey. So definitely in terms of investments, as well as the kind of enthusiasm and the kind of reach we have seen, the kind of number of investors and applications which we are seeing. So definitely shows the amount of maturity the overall category of investors have shown. And I think it will continue to improve going ahead.
Solanki, I hope that it helps our viewer entering into 2026 and making a sane decisions while applying for IPO. So thank you so much for giving us all those insights and, of course, taking out the time and speaking with us at NDTV Profit.